SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's just have a look at Bitcoin just very briefly, but overall it's the broader side of things, traditional markets and whatnot, that are painting the bigger picture. So we were talking about throughout the last, well, I suppose few weeks, that we're going to get the last bounce before the crash, and if this is it, then it was worse than I thought it was going to be. Again, you know, sitting on the sidelines is effectively what I've decided to do throughout September, and even throughout this last bounce before this crash kind of vibe. I still wasn't particularly sold on the risk to reward side of things. Now, if we think about what we're seeing here, the weekly close yesterday for the S&P, we're still above the 200 exponential, 200 simple here. So there is every chance that we do continue this bounce next week. And again, you know, we look at things on weeklies. Weeklies can take a little while to play. We were talking about the everything bounce all the way back to here in June. You know, we did have a bounce and we more or less retraced it all over again. So over the space of a month, it was pretty testy, although we did have a reaction almost immediately, but the bigger side of the picture was painted over a couple of months. You know, we could maybe see something along those lines with the S&P, so we might be saying, all right, maybe it's over too soon, just based on what we're looking at as of 2 weeks worth of price action, but it's not the same kind of vibe. Over here, when we were talking about this last, the everything bounce, it was based around commodities reaching their peaks. Commodities like oil and whatnot were all pretty high and already starting a consolidation. I think oil was around 120 at the time, and we started to break down from here. Yes, about 120. I said, look, this is likely to get a decent rejection now, and with that will come a rotation from energy stocks and commodities into normal stocks and indices. That was part of my overall theory. Now, what we're seeing now is the opposite of that. We're seeing commodities generally moving up, but oil really rocketing, so we're getting a big breakout from oil here. Although I do think that we've hit a temporary resistance on the weekly here, around 93 to 21 exponential. And I still think that oil has got further to run, and that's one hell of a breakout. I know that there's fundamental reasons for that, but it doesn't really matter what the reasons are. You've got the TA side of things, which worked, and then that was, I suppose, that fuel was added to the fire of the TA with the tightening of the supply. So with this in mind, it's the opposite of what the everything bounce was. Everything bounce was a rejection from here, money coming out of commodities and oil, and support here going into stocks. So now what we're seeing, probably most likely, is the opposite of that. So obviously a rejection over here, and now probably a breakdown over the next few weeks. So I'm not in any way looking for positions to take. And really, when it comes to making any kind of trades, it's been pretty crap for crypto and for stocks, obviously, since we got out at the top of this triangle anyway. So we're quite happy with all of that. But there's not really been an opportunity, I would have said, outside of this potential bounce here. But even when you worked out what the bounce could be, it's not going to be anything like this one. It was most likely going to be a lot worse, to be fair, because we've broken down outside of a symmetrical triangle. It's a bearish breakdown and a retest of a 200 simple. So not really feeling this bounce, to be honest with you. If we were to bounce and reclaim major moving averages or on the S&P areas above the 3800, then maybe we could talk about further upside. But for the moment, as it looks right now, nah, it looks pretty rubbish. And obviously Bitcoin is suffering as a result of that. It is in many ways just a weak brother, a distant relative now of traditional markets, and so it came down as expected. We were talking about Friday being a dumpy day. The economic data coming through was not going to be favourable. I mean, there was no guarantees, but I mean, it made sense that we were going to dump as a result of that. So even throughout this week, we were talking about the upside potential with the Itchy Cloud trend signal that was in play. It's not in play anymore, but whatever it was doing, I did say, like, when it comes to Friday, you want to more or less get out of any positions, because the potential for a dump is reasonable. Now, if we do think about the size of the dump, we'll just put it on the dailies just so we can measure the day's move. It's not that bad in the grand scheme of things. In one move, it was sort of 3.5%. So obviously that's not horrendous, right? And we're back within the box of support. This major box is, I would say anything above this box is good, anything below this box is bad. So the box ends at around 19,500, and the top of that box 19,750. So again, yeah, this box will make or break the continuation of this move. Now we're below all major moving averages here on the 4 hourly. We never got a golden cross. We got our trend signal was cancelled, and it was all dragged down the stairs by traditional markets. And again, thinking about commodities moving up and the reasons for that and the expectation of that happening. I've been talking about it the whole of September. Now, oil is going to go back up to 100. Oil's going to go back up to 100. Looks like it's on its way back up to 100. Maybe not next week, but soon. You know, that's the chart that I've been trading the most, and the implications of that chart can be transferred onto any other chart, because obviously we're talking about higher fuel prices, we're talking about higher food prices, we're talking about inflation. So it's not going to look good, I say, as these charts continue with their current direction, which is oil up, commodities up, stocks down, Bitcoin down, crypto down. So long story short, this is a weekend. It's going to be choppy to say the least. I'm not looking for major breakdowns or anything like this at this current moment in time. Like I said, with that pullback that we had yesterday, or the dump that we had, it wasn't savage. You know, it wasn't it wasn't even 5, definitely wasn't 10, 15, 20% drops as what you normally would see in something horrendous. I suppose the fear is that we do continue on, and that would be realistic based on the chart. But it wasn't a catastrophic dump yesterday. So with that in mind, yeah, I'm not looking for immediate continuation down to new lows right this very moment in time. We would be looking for short signals to play out probably over the next few days or so, or to be generated over the next few days on the 4-hour Litchi cloud and whatnot. It's not going to take much for that to be generated, to be honest with you. 4-hourly candle body closures below around 19,300 is going to probably cause that over the next few days, and then that is probably going to give us the next bigger move, probably some point next week. And again, traditional markets, you got to look at those. You got to look at those, and when you see a shooting star like this, this candle body, despite, you know, still remaining above its 200 simple moving average, it's not a good look for it. That's a sharp sell-off. Sellers outweigh the buyers over the space of the week. Started off okay, ended off in tragedy. It's still closed green, but it's not a good look at all. And this is just the S&P. If you look at Nasdaq and Dow Jones Industrial Average, all of those are looking a lot worse than this. And so it doesn't bode well for what anyone would be expecting continuation to the upside. Now, might not be the case. Obviously, there could be, the charts could pull an upset, certainly. And if we just think about what we're seeing here on the daily, you know, there's nothing really to be too excited about being below all major moving averages. So I'm not really expecting that, although there could be. And we don't know what the Fed are going to say, and it's only the Fed that's going to really change this. Really, that's pretty much the deal right now. The Fed will need to make some kind of adjustment, maybe not even a pivot, but maybe just a cooling off period to allow for economic data, which is usually at least 1 or sometimes 2 months behind the release of that data. So the data that came out yesterday was actually August's information. So you know what I mean? So maybe the Fed not necessarily pivot, but they'll take it easy for a little bit. That could be possible, but to imagine them to pivot really well while inflation is high, and given what we're seeing with oil and the implications of a higher oil price, you know, the chances of them really actually pivoting while this is what's going on in front of our very eyes. Like I say, this is the price of oil. You know, the data will be lagging a month or two behind this. The Fed and everybody knows this. What this big spike in oil prices mean is food and fuel inflation. We already recognize that the core inflation was higher on the last CPI read, and that's why it spooked the market so much. Because, you know, most people, I don't know about most people, but, you know, people like myself who look at these charts recognize that oil will do a breakout at some point soon. This is a bullish formation. It's only being held down by the strength of the dollar. It will break out, and now we are getting that breakout. So with the core inflation actually being higher on the last CPI, which is why, like I say, why the market's dumped, the implication of that is, if for whatever reason oil goes up and starts to creep up back up to 100 and above 100, then that is inflation, generally speaking, going up, because the CPI overall was less. There was lower inflation on the last CPI, but because the core inflation was high, people thought, well, that is a bit of an issue, because for whatever reason, if this starts to go up, then it's not just going to be the core inflation that's higher, it's going to be everything that's higher again, basically higher inflation. So the Fed will probably be seeing this spike here going, well, that's us done for the rest of the year. We're going to have to continue with our trajectory, 75 basis point. That's probably the deal. If I was them, that's what I would probably do. There is an argument to say they could chill out for a month or two to allow economic data to come through and to catch up. But with what we're seeing here, 2 months from now, inflation will be higher again if this is the way that the oil wants to trade. And I expect, like I've been saying for pretty much the whole of September, throughout all these weeks, oil's going to go back up to 100 to 105 at least, and if it does break above there, then it goes to a new all-time high. So that's a problem. That's a big problem. So overall, still sitting out this market. I know it's a boring thing to say and do, but it is probably the best thing to actually do. Derivatives have been my bread and butter throughout this last month because of my lack of conviction with spot markets. Don't want to position myself in a market which is potentially going to crash, and even the bounces are weak, so it's not really a great place to be doing it. However, a crash would still be very much welcomed by me, and I would be pretty convinced in buying into some extreme lows in crypto across the board. I won't just be buying Bitcoin. In fact, probably won't even be buying it. I would just be buying all these altcoins that I've been highlighting for a while. But yeah, long story short, it's not a good look, but there is still hope as we close these 4-hourly candles within this box, but closures below, I'd say at least 19,300, but anything lower than that on a 4-hourly will generate a short signal, and then we'll have continuation probably throughout next week. The S&P looks terrible, oil looks good, it spells the opposite of an everything bounce. It's basically the everything drop. So I'll leave it with you there. Thank you for watching, hope you have a nice weekend, take it easy.